if we said, okay, this could actually be a pole, right? From here to here. And then we would draw out like what our suspected flag would look like, you know, something like this, right? Now, technically on a bull flag, it will not, price action will not drop lower than 50% of this pole. Okay. So if I took a fib from the low to the high, that would be about the 0.5, which means this bull flag, if it does form a bull flag, it's really kind of not technically a bull flag because the formation hasn't really come in. But that means this bull flag would extend down to about 44,232. Now, if you take your head and shoulders and you turn your head and shoulders on, right? That's just above this $36,000 mark if the head and shoulders fails. It also, right, the legs, it also comes in just under the legs of that head and shoulders. So we know that range from 49,000 to 44,000 is possible, and it could very well bounce there. 50 is a psychological number, right? We hear about those all the time. And when people get to those points, there can be a lot of trading in those areas. All right. So you guys can see where I've gotten some of these measurements here. All right. So we're going to turn these off. And now we're going to go turn on my zones. All right. Now these zones, I've been mapping these all the way up and down since 2021. So my little chart here is already mapped, but let's look at that zone there, right? We have 50,000 here. We have our 48, 49,000 zone here. And we have our lower zones down this way. And what you notice when you get to that $50,000 range, the zones are not as thick. They're thin. They're on smaller time frames like the 1 hour, the 12 hour, maybe the 14 hour. And remember, we're looking at a macro view. We're looking at something that is going to hold long term. And so when I look at things that are going to hold long term, I look at those zones, those vector zones that you hear about maybe through ICT, that inner circle trading arena. I look for those higher time frames above the daily if I can. Sometimes the daily is where it's got to be, but I always label them. And here at 48,000, we have the bottom of a 3-week vector zone. What does that look like? Let's turn on our 3-week. That's the remainder of this vector zone right here. Right here. Now, a lot of times they will collect and then move up, and on the way back down, this is where they'll land. This is almost like that liquidity pool, okay, that we talk about. And if you'll notice here, if we go back to 2021, when we hit that top in here between, well, here it is, like say from 47.7 all the way up to our 69,003 zone. There was a lot of trading here, both on off of this top and off of this top, right? We can all see that. And then on the way back, boom, we did this trading here. But when it took off, when it broke out from the top of that previous run, it really did not leave a whole lot here. What it did leave has now been collected. But between like that 49, right, and the bottom of this wick, there's really not a whole lot holding it. And one of the ways that we can check that, right, and this is where they will print a lot of their vector zones. If we turn on our volume profile and we look at the volume, let's get rid of the old runs and kind of come over here like this. See if we can get our volume profile. What is that? It's 16,000. We know we're not going to 16,000. There are people calling for 30,000, so I'll leave that on the screen. Let's see if we can get our, there we go. So above 30,000, we are at our point of control right now. We are actually holding that point of control. Like that's how big this place is. But if you look, there's not a whole lot right here, right? And look how little volume was there. Do you see that? Now, a lot of times when these zones do print, let's see where else we have a macro zone. They will print in those blank spaces, right? Like we can see a lot of these have been printed in here, but they're lower time frames, all except the 4-month. So I want to show you guys that. See how little that zone is there? That's very little liquid actually, which tells me that hitting that level, it can pretty much go through very quickly. And this is one of the things that I found as I was going over my own TA. It's a really thin area in here. So looking at my technical analysis and looking at the zones in the technical analysis, I had made a statement that that price action really needed to stay above that $53,000 zone in order to have a rally to the daily 800, which is quickly becoming gone. But if I look at that, the price action that is going on, it's a very thin likelihood that that is actually going to hold. I mean, it's just a very, very thin swath of liquid here. The most is coming up around here, around that 59, maybe this 58 mark. So losing that mark there, the likelihood of swiping through that 3-day 800 at 53 is really great. Now, one of the things that will happen a lot of times is in those low volume areas is where we get these vector zones printed as it either jets up above or falls down through. And that's what we see a lot of traders saying, okay, well, we have a vector zone here. This is the area that we're going to trade in. Now, on the way down, when it or on the way up, when it leaves these below, I just let it collect what it's going to do, but I leave my chart marked because on the way back down off a top, it's most likely going to get hung up or find some slight support right here at this higher time frame zone, whereas possible wicks can go down through it, right? So we're getting very close to landing right here around this 3-day 800 EMA. Could she just wick to it and then close at a higher point of support? Yes, preferably she will. The likelihood, I'm really not seeing it as a long-term support. And I will tell you why. Because if you go down to your lower time frames, I'm going to find us on the 18-hour here, just to pick a time frame to look at, right? You'll see how I keep track of the moving averages. So up here, like say if we were making a target out of this neckline, right? The head and shoulders neckline up around the 83,000 mark. Your daily 55 is directly under that. That is typically a point of rejection when the daily tests the 55 SMA. A lot of people will shoot for the daily 50 EMA, but if the daily 55 SMA is above it, that's usually where your wicks will go on the daily. However, below the daily 55, we have the 3-week 50 EMA. That's a larger time frame moving average. It's going to carry heavier weight. The 50 EMAs often do. Between your 50 EMA and your 800 EMA, those will carry weight. And the higher the time frame they're on, the more weight they will carry. So I'm looking at this chart and I'm saying, okay, well, the neckline's way up here. The daily 55 can be a wick, but we have some issues here. We have major resistance at the 3-week 50. Under the 3-week 50, we have the 5-day 200, right? Under the 5-day 200, we have, well, let's get rid of our 1 hour. That's not still there, hopefully. But we have our 4-hour 50 EMA, and we also have our 1 hour. Oh, I turned them off. Sorry about that, guys. So that I can clear the chart. And look at it like that. We also have our 1 hour 800 EMA, which is usually marked, but now I don't have it marked for some reason. So we'll go right here. That's going to be big resistance as we go down. That 1 hour 800 EMA is a heavy. It really is, especially for lower time frame scalps and things such as that. Your 800 EMA is really going to be a heavy, especially on your first attempt to recover it. So those first hits to it are typically going to be rejection. Okay. And that's why I track these, because even when I'm on a lower time frame, I'm watching this 1 hour 800 EMA. First of all, it's a higher time frame, so it's going to be heavier resistance, right? And a lot of times when things are under the 1 hour 800 EMA, It's just resistance, resistance, resistance. It is a battle zone. You can almost count on it, right? That if, say, you were to get over, I think I saw her battling with her 15-minute 800 EMA. Yeah, here we are. We're at that battle on the 15-minute. So the point is to get over that 15-minute 800 EMA, move up, get over that 30-minute 800 EMA, which is over here, right? Once we get over the 1 hour 800 EMA, a lot of times you will see your higher time frames, say like the 2 hour, 3 hour, 4 hour, sometimes even the 6 hour, depending on how much volume is coming in, print a breakout vector. Now, when they print those breakout vectors off the 1 hour 800 EMA, a lot of times they're going for the 4 hour 800 EMA. But see, we're in a downward trend now. So that 1 hour 800 EMA is resistance to the 4 hour that is way up here. Do you all see how that goes? Because now we're not climbing down. On the way down, when we got to that 4 hour 800, it was like it needs to hold that 4 hour 800. It has to hold that position. Losing that position, and we can see a slide to the 1 hour, right? So that's what we're battling going up. And there's just a lot of major resistance up ahead. A lot of major resistance. So when it comes to looking for that upside, we take one step at a time. You'll see here on the 4 hour that just by fighting with that 15-minute 800 EMA, it's also fighting and trying to hold its position over the 4 hour 50 EMA. And this is one of the things you might have learned from like Waters Above, right? You have your 8 SMA in yellow here that is pinching into your white 55 SMA as it comes to meet the blue 50 EMA. This is what we used to call a wolf cross with upside implied coming in. So long as she can hold that 4 hour 50 EMA, you have a good chance of trying to get above this 3-week 55. This 3-week 55 is just, it's a higher time frame. It's going to be big resistance. It just is. These are your heavies coming in. In the bull run, what happens is even our 1 hour 800 EMA will move above, price action will move up with such force and such volume and so consistently that it will drag the 1 hour 800 EMA to a higher price action position than the 4 hour, right? So when it comes to those pullbacks on the way up, that 1 hour 800 can act like a support, a heavy support. Your heavier support is going to be the 4 hour that is under it. So a lot of times you'll see those bounces up and down from the 1 hour to the 4 hour as she's recovering the bull market. And when she does come down through the 1 hour, it's just it's like a temporary retest of those moving averages that fall below that, because we will even lose the 4 hour 800 EMA on the way up, meaning price action will accelerate upwards at such a speed that it just leaves the 4 hour 800 EMA behind. And what we see at these tops, like we did in 2021 and now again in 2025, is you'll see that 4 hour 800 EMA start to become target, right? So and that's one of your signals that, wait a minute, now they're really going to take it deep. If we lose this point, they're going to take it deep. They're searching for more below. These moving averages really just act as points of resistance and possible rejection. That's why I use them. It's like my way when I'm looking at my chart, no matter what time frame I'm looking at it, of keeping an eye on where is my heaviest resistance. And so that's why that 3 hour or that 3-week 50 EMA that is way up here was really my highest target right here. And that was posted before the 1 hour 800 EMA actually started to fall through. So now this is your high, right? Until it falls through something a little stronger. That's why our targets can be moving. We can see in the beginning how high she may want to go. But when you track those 800 EMAs, you'll notice those targets get lower and lower on the way down. And so that's why that 3-week 50 EMA was, I mean, that's my ultimate high. All right. So the other portion of it is, let's see. Yeah, we covered your weekly 200 SMA, that zone at 58, 38, and 56, 59. Like you're really going to want it to hold around there. Your spring rally to the daily 800 EMA, that's highly unlikely. Highly unlikely if we